The way is in training. Miyamoto Musashi. And the master swordsman teaches us a lot in the book of Five Rings. And I do love that quote. The way is in training. 10 to 15 minutes a day, that is all we ask. Been paying attention to a lot that traders teach. And the one thing you will consistently hear from the people who are successful at trading and investing is time and service. That is spending time learning these charts, learning the nuances. We ask you to spend 10 to 15 minutes a day going through the four charts that we track. Yes, we throw Bitcoin in now just because you ask for it, but making sure you learn the nuances of our charts. And of course, you can throw your own ETFs or stocks in there also. But again, learning it and then practicing it. Practice trading every effort you get. Same with once you start getting good at that, that's when you go to fractional shares. In fact, I'm going to put fractional trading, that training at the end of today's video so you understand what that's like, putting just a little bit of skin in the game. Say $100 on a trade where you can buy a fractional share, say in the S&P, instead of going out and spending $400, spending $100, and then you can calculate very easily what your percentage gain or loss is. Let's jump into these charts. We see the S&P. Let me get out. I'm in post market right now. That's another beautiful thing about TC2000. Pre-market, post-market. I just switched back to regular hours. What do we see going on? Well, so far this week, we again continue to see weakening. We have pretty much a doji that's forming there. Down again today, 0.49%. Price percent oscillator pulling away from the red signal line. Derivative oscillator gaining downward momentum. For those of you who jumped in to the 2-day recross going down, you're doing okay, aren't you? Yes. Again, hope you set your loss limits when you jumped in along with your profit bands, profit and loss bands. The secret of that is a great training. You know, I think I'm going to put that at the end of today's video also for you. So you have both of those, fractional shares and the secrets of profit and loss bands. So those will be important things for you. Now let's go ahead and redraw our trend line, get a better trend line going there. So we see again on that 2-day chart, derivative oscillator, price percent oscillator moving down. We can see where things are a little flat in the morning and then arcing over, going down in the afternoon. So again, things are looking nice, going in the right direction. Again, don't want things necessarily go up or down. We want things to move with our charts. Remember, those of you who are new, you might be saying, what is this cat talking about? Why would I want anything to go down? Because you have things like puts. You also have inverse funds like SH, which is the ProShares short. In fact, it goes up when the S&P goes down. So anyway, that's just a little thing we teach as you go through this training with us. Let's go to the Qs. See, the Qs really sliding sideways, lots of indecision there, down 1.69%, but overall, we can see as far as the Heikin-Ashi candlesticks go, but that price percent oscillator pulling away from the red signal line, derivative oscillator gaining downward momentum. 2-day chart, that's where we see that sideways slide going on. But again, what do we have going on with the 2-day candle? We continue to see that, of course, heading down just the first day of the latest 2-day candle. Again, some downward pressure there, price percent oscillator heading down at a steeper angle, derivative oscillator losing downward momentum. See what we had happen at the end of the day, or did it happen? Yeah, it happened at the end of the day. Some down movement in the morning, but the majority of it in the afternoon, spiking over that price percent oscillator. On the half-day chart, derivative oscillator went negative at the same time. Always a good sign. So that's where we are on the Qs. Let's look at bonds up along with gold. Bonds up 0.53%. And again, first green candle we've seen in a while, albeit a solid green, pushing above the weekly trend line. We see the price percent oscillator flattening, derivative oscillator losing momentum for the first time in many, many weeks. In fact, many months. We go to the 2-day. What do we see there? trying to cross over, going up, going into the third day of up movement, touching the weekly trend line. So we'll continue to watch. Can't call a crossover until it occurs, but of course that would be your final signal for an out after that spectacular 2-day down run. It's been quite nice, hasn't it? Started off somewhere at the 150 mark to a low back on Friday of 133. Not bad, is it? 150 to 133 over the course of 2 months, not even 2 months, a month and a half. Yeah, so quite nice. Now, let's just continue to watch. Hadn't happened yet, but it might. Derivative oscillators punched over positive also, or trying to. Well, it did punch over on the last one. It punched over on the last 2-day candle. We see on the half day, crossed over going up back in the morning on the 27th. Blew through later that day on Monday, blew through the half-day trend line, the 2-day trend line, and now at the end of the day blew through the weekly. So again, bonds catching a little bit of fire. Don't have a weekly vertical crossover yet, but looking up for bonds finally. Doesn't mean it isn't going to roll back over, but we'll watch, see, learn, and practice. Go to gold, up 0.35%. Again, what do we see on that weekly chart? A sideways slide, derivative oscillator losing downward momentum. Price percent oscillator still tracking down a little bit, a little less than flat. Look at the 2-day chart. Of course, we had that 2-day crossover going up. Wasn't a recross, was just a cross in the opposite direction, which would have taken you out of any downplay in gold if you were still in any downplay. What do we see going on? Well, we can see a sideways slide, but moving up. Price percent oscillator pulling away from the red signal line, derivative oscillator heading up. What do we see on the half-day chart? Just won't cross over, will it? We saw where it was down on Tuesday and then popping up on Wednesday. So we'll continue to watch, see where gold is going to go. Like I told you guys, I'm ready for gold to catch fire. I want to buy gold. Hope you're ready to practice trade it or short it, however the charts lead you. Let's look at Bitcoin, up a little bit for Bitcoin, 1.68%. Red open box candle means a slowdown in the up movement, but still trying to cross over going down on the all-important price percent oscillator. Derivative oscillator is about flat so far, 3 days into a 5-day candle. What do we see on the 2-day? It's still negative, pulling away from the red signal line. Derivative oscillator gaining downward momentum. Red, solid red candle forming, which again is solid down movement. Not a big one, but again, it's the first solid red we've seen since all the way back on the 5th of March. So we'll pay attention, see which way Bitcoin is going. Half-day chart down in the morning, bit of recovery later. That's where we are on our big charts. If you don't have our book, hey man, we got an autographed copy waiting for you, Charting Your Way to Wealth. It'll help speed you along the way of learning. Of course, also subscribing at chartingwealth.com, filling out those daily market worksheets, weekly market worksheets, and trade worksheets. Those PDFs are in your notes every day. And if you sign up, you will get that email each and every day with the weekly review and forecast on Fridays, and of course, throughout the week, the daily review. My friends, God bless, all the best from the whole team at Charting Wealth World Headquarters. Thank you also for all the Patreon support.